Ladies and gentlemen, good day and welcome to Astra Microwave Products Limited Q2 FY26 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as of the date of this call. These statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. S. G. Reddy, Managing Director of Astra Microwave Products Limited. Thank you, and over to you, sir.
Thank you. And good evening to everyone. A warm welcome to all the participants joining the post-results earnings call of our company. I am joined today by my colleagues M. V. Reddy, Joint Managing Director, and Mr. Asim Kabra, Director Strategy and Business Development, and representatives from SGA, our Investor Relations Advisors. The results and investors' presentation for Q2 and H1 FY26 have been uploaded on our company website and stock exchanges. I hope you had the opportunity to go through them. In terms of the business and the financial performance, I am pleased to report that we have delivered a strong performance for this quarter with the improved margins supported by a favourable revenue mix. We are gradually and strategically transitioning from primarily supplying subsystems and components to delivering complete systems and integrated solutions. In terms of actual performance for Q2 FY26, standalone revenues stood at 213 crores with EBITDA of 46 crores, reflecting a healthy margin expansion to 51.7% and a profit after tax of 21 crores. On a half-yearly standalone basis, the revenue was 410 crores, up 7.2% year-on-year, with EBITDA stood at 85 crores with a margin of 20.6%, while the PAT grew by 13.5% year-on-year. These results underscore the strength and the resilience of our core operations. Major product deliveries during the quarter included modules for Utilisation and Rohini radars, 3D car prime, FLR, MPR, HMR, SDR, and several others. In terms of order book and business outlook, our standalone order book stood at 1916 crores as of 30th September 2025, and on a consolidated basis, it is at 2209 crores, providing strong visibility for the coming quarters. The order book continues to be predominantly domestic, particularly in the defense sector. Since most of the domestic business is build-to-spec driven, profit margins remain strong. A key highlight during the period was securing a major order for refurbishment of entire electronics for a long-range radar. Successful execution of this project is expected to open doors for many more such opportunities. We have also completed several price negotiation committees and participated in good number of RFPs with strong winning potential, giving us confidence to achieve our year-end order targets. We have also seen a notable improvement in the operating cash flows during the first half of the year, and we expect this positive trend to continue. On the product development front, we continue to make progress in HISAR, Virupaksha, and Uttam radars. As far as the joint venture is concerned, our ARC continues to perform well. The backpack SDRs for the Indian Army, developed by the company on NCNC model, is waiting for final technical approval. In the meantime, ARC continues to deliver software-defined radios for the Indian Air Force and has received initial orders for maintenance of electro-optic products, a new product line adopted by the company very recently. It has also secured a 286 crore order from the Ministry of Defence for supplying advanced communication systems to the Indian Air Force Special Forces very recently. It is expected to do about 41 million sales for the year and expected to have an order book of close to 100 million by the end of the year. In terms of technical achievements, we are proud of our recent achievements that highlight Astra's technological leadership. We have been engaged with India's space program for the last 25 years and have contributed to several landmark missions, including the recent ISRO CMS-03 satellite, India's heaviest communication satellite, through the supply of advanced RF and microwave subsystems such as C-band 15-watt SSCA and Ku-band receiver and converter. In terms of industry outlook, India's 15-year defense roadmap envisions a future-ready, self-reliant and technology-led military by 2040, emphasizing indigenization, innovation and integration across land, sea, air, space and cyber domains. The recently approved procurement proposals worth rupees 79,000 crores mark a significant step towards accelerated capability building and a deeper participation from the Indian defense industrial base. This vision also aligns with India's goal of becoming a global defense exporter, paving the way for greater opportunities for the private players like Astra Microwave. In the long term, Astra is well positioned to capitalize on these developments, continue delivering cutting-edge products, and expand its capabilities and contribute meaningfully to India's defense and space resilience. With these remarks, now I hand over to Dr. M.V. Reddy, Joint MD and Asim Kabra later on, who will give more insight into new product development, business outlook in the near and long term, and the strategies adopted to take the company to the next level of growth cycle. Over to M.V. Reddy.
Thank you, SR. Good evening, ladies and gentlemen. The overall performance of the company in the first half of the FY26 is in line with the expectation, and we are well positioned to do much better in the second half, both in terms of order inflow and sales. We would like to share a few key achievements and business updates of this quarter. With regard to the standalone order book, we are at 1916 crores as on 30th September and concluded negotiations for 400 crores plus orders, which are expected to book in Q3. We plan to book 600 crores plus worth of orders in Q4. In the last quarter, majority of the orders we booked are in the radar and EW segments, including strategically very important orders, as Mr. Chair mentioned, for the growth of our organization. I am also happy to share that we have emerged as a successful bidder in most competitive project of EW suite for 230 as a lead system integrator. On the execution front, we are almost at par with our sales target, though we are facing few challenges to complete couple of space projects. Our JVC, ARC has picked up well and expected to book approximately 100 to 120 million worth of orders by end of FY26. With regard to sales also, ARC is in line with the guidance given and expected to book sales of $42 million in the current year. We reiterate to mention that with a strong order inflow, healthy prospects and strengthened technological capabilities, we have a clear visibility of delivering consistent growth and creating long-term value for our stakeholders. Our focus remains on executing existing strategic important and critical orders efficiently while leveraging new opportunity in defense, aerospace, satellite and meteorology market segments. That's all from my side. I would like to be happy to answer your questions. Now I'll hand over to Mr. Asim Kabra, Director of Strategy and Business Development. Over to you, Mr. Asim.
Yeah, thanks, MV. Thanks, Ajay. Good afternoon, friends, and welcome to our quarterly outlook meet. This time I want to address two broad themes in my presentation today. One, I would like to draw your attention to the reality of product development and cycles and the time it takes to create products and hence the moat in the business which arises. And second, I would like to give you a sense of our growth plans and the number outlooks for the next 3 years, 4 years, 5 years or so. And that's for the first time that we'll be doing so. Basically, capabilities in the new modes of warfare will be tech-driven, and as you know, tech curve is steep with a very short shelf life. So the questions which arise are manifold. Will electronic warfare limit the ability to penetrate enemy skies? Will slow-moving aircraft, helicopters stand a fighting chance against the max speed missiles which are now the order of the day? Or will a fight to strike enemy locations with precision over long distances shall turn the tide of the war? Will infantry stand a fighting chance against drones? And these drones will be maneuvered over long distances by drone pilots sitting across remote locations and so on. But if you really think about it, all of these scenarios are concurrent. And the new rules that are being called in for writing the manuals of warfare are new for everybody. But one thing is clear. The ability to detect threats ahead of time using radars will be critical. Similarly, offensive capabilities will be built around radars and seekers homing into targets with agility and precision. And Astra is proud to be operating in all these critical segments. As you know, and as we stressed big time and explained in detail the last time, we spoke that we are a very well diversified company operating in the areas of radar, missile systems, electronic warfare, space, chip design, weather, meteorology, communication systems, etc., etc. And when we speak of radars, they are both airborne, shipborne, and ground-based. So we are a platform company operating in the entire segment of electronic warfare, if I may say so. Our scientists have proven that systems which have been developed over the years have worked well, and self-reliance and self-sufficiency have gained much currency. Expectations accordingly have risen sky high that we will churn out globally competitive new warfare-based solutions and products in no time. But reality, if I was to stress, is a slightly different scenario. Products, they take time to be designed, built, tested, and they require serious multi-year tests before they can be given the green light to be produced in mass numbers, which can create high sales volumes and profits for the creators. So we are seeing companies talking about 10-year horizons in which their sales will take off, etc., etc., and they will become platform companies. So when we require tests across multiple user trials, across different conditions, and creating products that require coordination and supply chain linkages amongst various components, sub-component suppliers, these are typically multi-year efforts, where core capabilities get morphed into products and solutions using parts which are produced in-house or core to us, and then several which are procured from external vendors, and everything morphs into one product. So where does Astra fit into the above scenario? As we see it, our revenue base would comprise of a traditional supply of subsystems and critical components, with us being part of designated supply chains for various products which have been developed within our country over decades by our distinguished clients in the defense PSUs as well as defense labs. This subsystem capability we will layer with complete Astra designed and produced radars and other war-gamed systems and solutions. Last time I mentioned to you, we are creating 3 completely Astra radars which will be in the market pretty soon. So while the former provides us regular sustenance business, which highlights our very well diversified and electronic development capabilities, the latter solutions will enable us to book high value, high volume, mass business with multi-year production contracts. And that, I think, will be the essence. And it has taken us, please remember, that 33 long years to cross a revenue of 1,000 crores, which also reflects partly on how the Indian defense industry has developed from scratch. The timeline is also, if I would say, a reflection of the long development cycles that form the bedrock of our nation's defense equipment, production, and designing capabilities. It is going to be a hard and time-consuming exercise, in my opinion, for any new entrant to break into this business at scale and in a short period of time. And that is the moat which long-established defense sector companies hope to benefit from. We've seen stellar results over the last few days from Data Patterns, from Paras, Texas Cadence. I think it's a fair thing to say that this is a sign of times to come. Somebody will come in one quarter, somebody will come in the other quarter. But the trend is fairly positive over a period of time, that we will all capitalize on the significant market for solutions opening up based on the extensive product ranges which have been created over a period of time. Now, as you know, Astra management has always prided itself on its conservative estimates. We love to meet our guidance, and we put in serious amount of efforts to do so. So we have waited for clarity on our numbers to share our ambitions with you for a long, long time. And as you know, we are very crucial partners in multiple platforms which are going for production now. I'm talking of QR-SAMs, Uttam radars, Virupak, Su-30 EW upgrade, which everything we just mentioned, we are the LSIs over there, software-defined radios. And these are the cornerstones of our enhanced visibility, which we are very comfortable to share with you now. So what are we talking about? We are happy to share in our belief that what we accomplished in 33 years, okay, the X turnover which we have achieved in 33 years, we are seeking to build on that foundation. And we have a very good chance of doubling our turnover, 2x plus over the next 3 to 4 years. I think this is very important that for the first time Astra management is coming out and telling you that over the next 3 to 4 years, we will become 2x of our current size. And that lays the platform over the next few years thereafter for a 3x, and we will talk to you about how. And let me be quiet for a second and let that sink in, right? That will be $250,000 on current exchange rate that we will exceed. FY27 turnover, okay? So before I go into that, I want to highlight about approximately 2.5 years back, we met investors during our QIP round. And we were very clear that growth will be rear-ended. And I think we were the only guys talking about a rear-ended growth at that point in time. And that speaks for our conservatism. We defined at that time around 8,000 plus crores of business, which we had in sight very clearly. And we were very clear also that the first 3 years, and I'm talking of 2.5 years back, that the first 3 years we would be the staging grounds, preparing for the execution required in the production orders. And we have just explained or mentioned to you the orders in the key platforms which we shall be executing. So what are the numbers that we are talking about? I think FY27 turnover, we shall start seeing revenues from QR-SAM project. And we hope to close it, somewhere around 1,400, 1,500, plus minus 50 range that particular year. That year, the year after that, we will have QR-SAM plus revenues starting to come in from Uttam radars for Tejas. And we hope to cross, I would say, somewhere around 1,650 plus minus again 50 crores in FY28. Now, that is a year, if you recall, where the QR-SAM will start going into full-blown production. And of course, our numbers depend on our clients' delivery schedules. Okay. FY29, will reflect revenues from QRSAM plus Uttam radars, and we hope at that point in time, Su-30 upgrades shall start to kick in. And that shall bring us to a very nice number, very close to 2,000 crores at that point in time. And I think the year after that, all these programs that we are talking about, QRSAM, Uttam radars, Su-30, EW suite, Virupaksha, okay, they will be in full-blown production. So FY30 should see us somewhere around 2,250 to 2,500 range. And please, whenever you look at these numbers, remember that we are talking of 3 to 4 years, and we are just about 1,051 crores last year. Okay. So we are focusing on our production lines for now. This is as promising a future as it can be. Whether it takes 3 years, 3.5 years, or 4 years, I cannot cast it in stone. But it is a great business outlook. I always believe that if time is our only major variable amongst many, that is unclear. And here, time is the only factor, which depends on the clients. So we are fixing our production lines, a new building is being constructed to take care of these requirements. And we are beginning to focus on Astra branded products and solutions, which I will speak more about the next time. But let me not stop here on the $250,000 plus projections. We are talking now very seriously, planning and deliberating in due earnest on multi-pronged strategies to jump at least fourfold from the $250,000 to $1 billion company. Astra will be $1 billion company. I cannot put a timeline onto that, but if you can see the scale at which we are growing up, you can very well be confident that we will get there. If Astra is going to be $1 billion company, we believe that it is a very achievable target, given the capabilities that exist in our company, which we intend building on further and deliver a world-class $1 billion company over a period of time, which is based on capitalizing on our nuts and bolts to a multiple platform strategy vision, backed by capabilities of an amazing team with multifaceted talents. We have spoken about this earlier, and I think I'll stop, take a breather, answer a lot of questions I'm sure which you will have as we move forward. That's the broad vision. We will create a 2x in the next 3 to 4 years, 3x soon thereafter, and we're focusing on a $1 billion target, becoming a $1 billion revenue company over a period of time. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from Goldman Sachs. Please go ahead.
Yeah. Hi. Good evening, and thanks for the opportunity and sharing the medium-term stroke long-term vision for Astra. Couple of questions from my side. The vision that we talked about actually is more domestic focused, but what we are seeing now is a lot of defense spending surge in Europe. And with our branded product solutions, what kind of strategy we have to penetrate these export markets with the kind of products we have, particularly now some of these like Uttam radar, EW suite for Su-30, these are fairly proven. So just wanted to get a little bit of flavor on export strategy. That is the first question. The second question I have is on is on the working capital side. As Mr. Reddy said in his opening remarks that, and it is very well evident also that receivables have been unlocked. So what kind of working capital days or cash conversion cycle we are looking at end of FY26?
Let me take the first question, the first part of the question, then I'm sure SG Reddy will address the second part. Just 2 hours back, MV Reddy and I had a discussion on our European and NATO expansion strategy. We cannot build anything from scratch sitting here, right? We have identified one potential partner. We don't know if the deal is going to happen or not, okay? But these are guys who have been working in that space, etc., etc. There are multiple ways of collaborating with them, but I think collaboration is the way to go forward, wherein not only will they act as our distributors, but also our technology partners, sourcing technologies, licensing technologies, etc., etc. I would hasten to add here that to penetrate overseas markets in any larger context, you require complete products. I can't go to somebody and say that I will build an APU for you, AAA unit for you, okay? Or I will bring a small subsystem for you. It has to fit into their overall context. So if you have to really look at capturing a larger slice of the overall market out there, you need solutions which have been tested here, tested somewhere, and meet the needs of the market, right? So we are actually, that will be one of the key cornerstones of our strategy. If I'm answering your question, obviously I cannot give you any significant details, but that's the broad thrust of our thing. If you think about it, our lead strategy, which we have defined earlier, we are a collaborative platform. We don't seek to claim that we have everything or we are, 100% in-house complete platform. Platforms and solutions will require skill sets and tech, which we source from others also to build up around our core tech and have it tested out for real-time solutions. But that's probably one of the quickest ways to go into the market. I think SG will answer your working capital question.
Yeah, Amit, the days are improving primarily because of some of the critical programs we are able to close it in the first half of the year. As a result, the long pending receivables are realized and hence the cash flow position has improved. Going forward also we see the same trend to continue. Therefore, there is a positive thing happening in terms of working capital days. But only time will tell whether we are actually able to stand at that number by the end of the financial year. But we are very hopeful that the number of days will come down significantly. I don't want to put any specific number now. I am sharing with you the internal developments, which I believe will facilitate the improvement of the working capital days.
Great, sir. Thanks for sharing the trend and all the best.
Yeah, thank you.
Thank you.
Thank you. The next question is from the line of Ketan Gandhi from Gandhi Securities and Investments Private Limited. Please go ahead.
Hi, Atim. You have really indeed made our heartbeat stop for a second. It is so overwhelming to understand. No, I mean, it's really fabulous. I had some questions, but I forgot all my questions. I'm just thinking what you are going to do in the next couple of years and then another couple of years. I think what, as you rightly said, what you have done in the last 33 years, you are going to achieve in the next 3-4 years. And as being a conservative management in terms of the guidance and all that, I'm sure you will be able to achieve this. Thank you and all the best, Atim. Yeah. And all the
team. I'll just add to this. Right? We could have come up with this vision 2 years back and kept on speaking about it, right? But we are mentioning this at this point in time because these are programs now which are crystal clear in sight, right? So as Astra, we only want to talk about what is more or less clear And I think that's where we are fairly confident of delivering these.
Sure. That also gives us a lot of confidence that as you rightly said, all the programs are in the pipeline now, and it's all established now. So I don't feel that why you should not be achieved all this what you have said. Congratulations and all the best for the future. Thank you very much.
Thank you. The next question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, just pertaining to this $1 billion program, basically, or the target, in terms of capability or the CapEx, in order to achieve there over the next 5 or 6 years, how much of the capability are already in place, what we need to develop, and how much the additional CapEx would be needed for the same?
It is not 5 to 6 years for the $1 billion. Next 3 to 4 years are to exceed $250,000. Okay? But as you know, these programs require years of proactive planning. So today, 3 to 4 years back, we are embarking on multiple strategies, fine-tuning partners, alliances, etc., etc. Let me give you one example of what we are talking about, right? Okay. Everybody knows that space is the next frontier, right? Okay. As we mentioned, that we have been more than 2 decades in the space business. Quite a few of you actually have come to our unit, and you have gone through the kind of equipment which we have in place to test space-grade equipment and subsystems which are made for ISRO, SAC, etc., etc. Is it a far shot to imagine that we would be doing what we've been doing for ISRO and SAC for global players, where everywhere the space is exploding? Number one. Number two, we have all been talking about LEO. Now, near LEO is also very well getting established, which at some point in time will compete with drones which are may possibly become an intermediate step in the evolution, right? Okay. That again will necessitate a large number of satellites, mass manufacturing to happen. Companies are raising money at like $750 million, $800 million valuation with hardly any revenue numbers to their credit. If I extrapolate these numbers, actually I got close to my current market capitalization. Actually, I have numbers to support that kind of a valuation if I extrapolate space business alone. But forget about that. Very near Earth orbit will require, and LEO satellites will require a whole lot of satellites to be put in place, right? And I think 5 or 6 companies in India which have the capability to create these kind of products on a mass scale. Okay? We being one of them, we intend completely to capitalize on this larger trend, and I believe space will be a fascinating business. In terms of CapEx, right, space, I don't think it will require, honestly, in the immediate short term, any significant investment from our side, because we have already commissioned a facility in Bangalore to design and assemble small satellites. It's already commissioned. Okay. We are building our own satellite, which we shall put in space in about less than 24 months. Our own AstraSat-1 should be in space with multiple payloads. Okay. We could have done that earlier as a demo satellite, but no, we want it to be revenue accretive. We don't want to just spend money to be eligible for programs. We want it to be revenue accretive and profitable for us. That's why we delayed the launch of these satellites. So these are multiple programs which are in the works, right? So as the strategy is developed, I guess capital requirement subsequently will be at that point in time. But please remember that if you're doing $250,000 kind of a turnover, our cash flow is also going to be quite significant. If our cost base doesn't increase, it should not, because we have the facilities in place. So we will not see dramatic improvement or requirement to invest in doubling our turnover. Okay. and that should lead to a disproportionate impact on the bottom line from a cash flow perspective. And that's where we are. Rest time will tell.
Noted, sir. So, to sum up to $250 million kind of the revenue, all necessary ingredients are in place. Is that a correct assumption? And how we should look at the margins? Because space and defense are the two better margin business usually. So how should we look at your margins going forward overall?
I think there are a couple of players in the market which have better margins than us, so we have something to look forward to. Okay? I don't think our margins have reached probably the peak, but as we go into systems, right, okay, and which we are increasingly going into, I don't, and in a very competitive environment, okay, I think instead of an upfront complete margin business, you might see a strategic decision where upfront is less, but you have ANC contracts which are kicking in, which will be multi-year, et cetera, et cetera. But we don't, I think the margin base which we have right now, right, that plus minus a few percentages, that is very, very defensible. SGMV, do you want to add something to this, or am I being right?
Yeah, not much, I think.
Perfect. So I'm on the right track, right? Okay.
And sir, is it safe to assume that much of this growth would be back-ended, probably FY28, 27, 28, rather than 26?
Absolutely. Guys, we are not a company you can look at on a quarterly basis or short term, right? Okay. There are multiple other companies which can probably meet that need, right? Okay. We are a company, we are very clearly defining for you a 3 to 4 year vision, right? Where substantial growth is right now sitting in front of us. The challenge is execution, and I'm proud to say that we have a fairly kick-ass execution team led very ably by SGR and MVR here, okay? And supported by some really fantastic guys who have performed, So, I think we are very well placed, if I may say so.
And sir, if I can just squeeze one more question. Going forward, if we look at the defense procurement document which has come out couple of months back, a lot of focus has been given on electronic warfare where we are also present. So in terms of the capability side, you said you were going to develop systems. Could you give us a little bit more insight that where we are in terms of capability currently and what are the segments where we want to develop?
Guys, we have the basic building blocks in place, but I get beaten up by MVR for disclosing too much, right, in a competitive world. So I'm going to defer this question to MVR, okay?
Anyway, Atim has answered this question. So basically, we started our EWG journey now almost about 20 years back, and we basically started building components and subsystems. And now we started building the systems, especially for the airborne platforms. We started developing in the concurrent defense with the DRDO, and there is a reason why we got that EWG order for Virupaksha, on Angad project, and apart from that, we were also focusing a few EW systems like ESM and ECM systems, especially ESM for the naval application. That we started off a couple of years back. In between, we put that project on hold because of the few specifications were changed. So now we resuming that, and probably in a couple of years we'll be in a position to complete that and deliver to our demonstrative Navy. So likewise, we started both in ground as well as for airborne applications. We are slowly building the capability in all broad spectrum of the EW segment. We have a core design team with us, and we have an advantage of having the core design team who understand well right from the components to the entire system level. And recently, we have added a few guys who got a good experience in system engineering that adds value to all the existing team. So with that, we are confident that we will be in a position to develop AW systems.
Noted, sir. Thank you for answering my question and all the best for future.
Thank you.
Hello,
Yeah.
this is the operator. Am I audible?
Yeah, you are audible, but what's happening?
Is limited. Please go ahead.
Hi. Sir, am I audible to you?
Yeah, we can hear you.
Yeah. Hi. Sir, firstly, congratulations on great margins and for giving such a fantastic outlook for FY30. So just wanted to ask you, so you have given for FY27, 28, 29, 30 as well. So if you can throw some light, how are you planning to close this year, maybe on the top line basis on the margin front?
Margins should be there. English, how do you want to handle this? Hello.
Yeah.
Yes, sir. I
think our
can hear
guidance
you.
is for 1150 to 1200, if I'm not wrong. That's our guidance. I think we'll meet it, hopefully.
Yeah.
So this was a guidance that was given earlier. So you are
Yeah, we are on track. 1150 to 200. 1150 to 200 is the range. But guys, listen, most of our efforts are now for the next year and the year and then next 3 years thereafter. Right? So that's what there are focuses. English, you want to add something?
Actually, Nikhil, the question is not clear. You are asking about the margins for the coming year?
Current year. No, current year. Current year, Rajesh. He's asking for current year's guidance.
Current year, the gross margins will continue to be what you have delivered now. I would say in terms of EBITDA or PBT, we should be able to maintain the margins what you have delivered up to now.
Yeah.
I see some positive side out of it, but minimum is whatever is delivered now, we should be able to maintain.
And so for FY27?
Yeah, that's what. So I have given you for FY26. Now for the going year, FY27, FY28 kind of thing, the gross margins continue to be around 45 to 50%. That is what the standard for the last 2 years. Once we maintain that, the follow-up margins will continue to be what is there, with a slight positive increase there.
Bias is on the positive side. Yeah.
Yeah. Bias is on
very well put. Yeah. Very well explained. Yeah.
Okay, sir. And sir, just wanted to confirm, you said that in Q3 you will receive newer orders for about 400 crores and 600 crores in the last quarter, right?
Yeah, that's right.
Okay, sir. So those were my questions. Thanks for answering them and all the best, sir.
Thank you.
And when they are hanging up, somebody is hanging up, I think. Again, is that you and me?
Yes, I have promoted another participant.
Okay.
Yes. Keri Kumar Vadalia, you there?
Yes. Hello.
Yeah, hi.
Am I audible?
Yes, you're audible. Please go ahead.
So my question is, if we track our last 8 quarters, this is like second quarter we have delivered number of end defense related to 160 CR. So like, why as peers all are putting the great numbers and why our number is not on the growth aspect? So first question is that. And second is like, in last quarter, you had told us that has-been naval radar and the Seeker have invaded trial, and further on that we'll expect all the orders from. So what is the position on that?
Guys, is it not a function of what product, which client which company is delivering in which quarter? Right. We cannot comment on any quarterly numbers, but look at the trend, do the half year numbers. We cannot be looked at quarterly, right? This is not the right company, the right industry to look at on a quarterly basis. I think we have made it amply clear we don't want to address this again and again. Okay? We are here to present to you in a long product cycling, long gestation product business. We are here to deliver consistent value over years.
this headphone.
We will not be
इससे जो भी अनाउंस कर रहा हूँ वो जा ही नहीं रहे.
Hello, can you hear us?
Yes, sir.
Hello.
Hello. Yeah, I'm able to hear, sir.
Somebody else said something else. So we cannot be looking at on a quarterly short-term basis. Guys, look at us in blocks of years. See where we were 2 years back, where were we 4 years back, 6 years back, right? I think the trend will be very, very clear to you of what we are trying to do. We are for the first time giving you a 4-year vision, right? Okay. Where we are X is becoming 2X plus, 2X plus, okay? On the back of orders which are there in sight, okay? So that's how we need to be. That's how we look at the business. It's your prerogative how you look at the company, right? We are nobody to comment on that. But that's how we look at our business, right? If I may say so. So there was a second part to the question, which I think on the seekers, which MV can answer probably.
Yes, as Ben Vivalnada is before.
Speaker part, most of the tests have been completed, and some, repeat orders we are expecting in next couple of months with the limited series production numbers. The exact quantity will come to know only by next month, but we are expecting at least 20 plus numbers by March 26.
Okay. And so last thing, you in last quarter you have commented that you have submitted many RFI on the counter drone sites, and there was kind of a ground penetrating radar that we can get only like 100 units every year. So what is the status on that, sir?
On counter drones, let me answer the counter drones, right? On the counter drones, we were L2 in 3 bids. We lost out on them. There are many more opening up. Hopefully, we'll get something. Okay? But it's a bid-based process. On GPR, I think it is, that's the kind of outlook we have. That's one of the product lines. But MV, if I'm not wrong, none of the GPR bids have been opened, right? Okay?
No. We have participated few RFPs. The thing is going on. We'll come to know next couple of months. Actually, counter drone now we are working out a strategy to to optimize the further the technology to make sure that we can offer a different solution to different market segments. So initially the product what we have developed is basically kind of a generic and product for few of the customers. It became a bit costly, so hence we lost out in couple of cases. But now we are further optimizing this technology. Our team is working on that to make sure that each segment will have kind of a competitive solution.
So guys, here I think what MV is saying is we don't want to be competing at the low volume space in counter drones. I think we'll rather go in for specialized, high value, slightly more complicated, multifaceted solutions. That is our strategy on which we are working on right now.
Okay. Or any comment on the metrology product Mosam you are saying last quarter?
Yeah.
We've got the order, and we will explain that, please.
Yeah. Metrology front, we have already bagged a good number of orders. And going forward also now one contract is almost finalized. We have concluded negotiations. We are expecting orders soon. And also 2 more tenders we have participated for which TEC is going on. In a way, I would say in Mosam mission program, especially in the radar front, weather station front, we are the leading supplier and we bagged maximum orders till date. And going forward also, we have a very competitive solution. So hence, we are confident of bagging majority of the shares.
Okay. Thank you.
Thank you.
Thank you. The next question is on the line of Vipul Kumar from Sumangal Investments. Please go ahead.
Hi, thanks for the opportunity. So, what is the current outstanding order book for Astra Rafael Comsys System Private Limited?
order book as of 30th September is somewhere around 336 crores, and we are expecting around close to 800 to 850 crores in next 6-7 months.
For Astra Rafael, right, sir?
Yeah.
And what was their contribution to revenue and EBITDA for this 6 months, sir?
No contribution, I think it is close to about 35%. I don't have the exact number of Rafael contribution. They have made a profit before tax of about 11 crores for the half year, and for Q2 it made about 7 crores on a top line of about 78 crores of sales.
Okay, sir. And so over next 6 months, what type of execution we can see in this Astra Rafael?
By the end of the financial year, it is attempting to do a business of close to about 350 crores, close to that.
350 crores for the entire year. That should be the revenue, right?
For the entire year, yeah.
Thank you, sir, and all the best.
Yeah.
Thank you. The next question is from the line of Ayush Jha from Shagun Capital. Please go ahead.
Yes, hi. Hello. Am I audible?
Yes, please go ahead.
Thank you for the opportunity, sir. So my first question is regarding the improvement of the gross margin. If you compare YOY, gross margin has been improved by 1,000 basis points, and for H1, it is improved by 600 basis points. And I want to know the reason. And my second question is regarding the other expenses. It is 26 crore. If you compare to the other, it is significantly higher. So what was the reason? That was the two questions from my side, sir.
So as we said many times, gross margin is directly related to the product mix that has been sold by the company in a particular period. I will not be able to give specifically why it has gone up, but it is entirely due to the product mix. Probably we might have sold some of the products where the gross margin is slightly higher compared to the standard margins, and that is the reason why it has gone up. Secondly, the other expenditure, there are one or two expenditures like equipment maintenance, which is a long-term contract with the supplier, Keysight Technologies, which was pending for quite a long period of time. That got finalized in this quarter, and we are under obligation to pay them. That is one line item which has increased with the other expenditure in a big way. The second one which I can recollect is about the CSR expenditure. The entire CSR expenditure for this financial year was close to about 2.65 crores was incurred in this. So these are the two items which has pushed up the overall other expenditure.
Thank you so much, sir.
Yeah.
Thank you. The next question is from the line of Hansal Thakur from Lalkar Securities Private Limited. Please go ahead.
Good evening, gentlemen. Firstly, let me congratulate the entire management for painting such an ambitious mural of a vision. It's just, very heartening to know that, the company is going to grow leaps and bounds from here. I have a specific question regarding the recent orders that, the company got with respect to the communication system. I just was wondering if this is the Manpack SDR order that we got.
No, it's not Manpack SDR. Manpack SDR, that TEC is still going on. Most probably by December or Jan will get completed. The order which we bagged is from Indian Air Force for the different communication sets. That is under emergency procurement, they place the order.
Noted. And so how do we feel about this Manpack order whose POC will complete in December? Because do we have any color on that?
Trials will get completed, and we are expecting by March, I think they may open the bid.
Great. Lovely. Thank you so much, sir, and all the very best.
Thank you.
Thank you. Due to time constraint, that was the last question. I would now like to hand the conference over to management for closing comments. Over to you, sir.
Yeah. Thank you, ladies and gentlemen, for participating and interacting with us. We hope we are able to answer all your questions, and happy to see you again at the end of third quarter.
Great.
Thank you.
On behalf of Astra Microwave Products Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, guys. Bye.